important acronyms for people to be aware of and know about for 2025 moving forward.
Okay.
Is the MMCT, or Majority Minority Census Tract,
Okay.
and that is funded by the CRA, or the Community Reinvestment Act. In 2025, a lot of the lenders that we work with, both locally and around the country, are bringing more products to the market that fit the Majority Minority Census Tract guidelines, meaning in areas that have over a 50% population that comprises of a racial or ethnic minority, banks are incentivized to create special programs to help loans get funded there. So that's a bigger thing we've seen. Some of our legacy lenders, from the big banks down to community banks, are really putting money in the street based on these guidelines. And the CRA acronym I talked about was an act created in 1977 encouraging banks to bring more financial services to underrepresented areas. So in 2025, you just got more banks making that decision to bring grant money, not extra loans, grant money to specific geographic areas.
You're seeing that a lot in Washington, D.C., like the city itself, Prince George's County. You're also seeing it in Baltimore City. And, it's across the country, but just to give an example of local, I mean, we're seeing banks, lenders, 100% financing, no PMI.
No PMI?
No PMI. And they'll give you 20, 30, 40, 50 grand. I mean, it's pretty intense.
And that's as a grant, so that means you don't pay that back.
Correct.
So you're getting 100% financing,
yeah,
no PMI, with 20 and 30,000 to put down on a home that you don't have to pay back.
Right.
Still at a 7% interest rate?
Mm-hmm. Yeah, the interest rate is going to be the same. Yeah.
Okay.
Yeah.
So we can't get around that, but now we have programs that's helping the average person
Correct.
get into a home.
Correct.
Are y'all aware of any stipulations that comes with that you have to qualify for something like that?
Well, for all of them, for any mortgage product we talk about here, you do have to apply with that actual lender, and they're going to look at your debt to income ratio. They're going to look at your credit scores.
Yeah.
Most of them fit within the conventional guidelines, but there are some programs that are applicable within FHA guidelines. And FHA guidelines allow a lower credit score, higher debt to income ratio. Another specific kind of regional example is City National Bank, which is actually a Black-owned bank. Black-owned bank.
Yeah.
In LA, parts of specific census tracts in California, they've got up to $50,000 available through this Majority Minority Census Tract money. So in some of the higher price markets, that dollar amount for grant can go up significantly, and it can actually impact the rate because there is no stipulation on exactly what that money is used for. Some people will use it to put points on their loan to have a lower fixed interest rate for the life of the loan. There's lots of play depending on where you're at, but most of the time it's the same conventional or FHA approval guidelines.
Talk to me about new homeowner buyers, because I have a cousin, for an example. Her daughter's graduating this year, and I know she wants to get into her first home, but she was like, "Man, Anthony, I'm going to need some help because I don't have 20% to put down." And she was like, "And Anthony, to be honest with you, I don't think I have 5%." And she's making decent money, but she needs a step up. And I think she's not the only one. I think a lot of people who are watching right now are saying, yo, I need a little bit of help too to get into a home. Are there any good programs for new homeowners?
Yeah, quite a few. I mean, talk about some of the ones that follow this Majority Minority Census Tract.
Okay.
We've got another program with a regional bank called Truist Bank.
Truist. That's my bank.
Truist does a great job right now.
They do.
They've got a $10,000 grant out there for first-time buyers, and most of these also have not first-time buyers, meaning your name is not on the deed to another home right now. So you could have owned a home before and you sold it. Getting back into the game, you can get access to the money too.
Yeah, I would even say some of them, even if you have the home, they're still giving out the money. I mean, I just got someone under contract, and the bank is still giving them $7,500. So that's something to keep in mind too, that, hey, as long as it's your primary residence and you might own another home, but they might be willing to still give you some money. They're not going to give you 50 grand, but they might give you a few dollars here.
Here is the truth. I am always looking for practical ways to help you build, wealth, specifically generational wealth and legacy. And one of the best ways you can do that is with life insurance. That's why I partnered with my friends at Ethos. They made buying life insurance simple and hassle-free. Whether you're the main provider for your family or want to make sure your loved ones aren't left with financial burdens like debt, life insurance is a powerful way to provide financial security. As a business owner and a homeowner, I took this seriously and secured a $2 million life insurance policy through Ethos. Why? Because having a peace of mind, knowing my family will be cared for when I'm no longer here, is extremely priceless. What I love about Ethos is their quick and straightforward process. You can apply entirely online in as little as 10 minutes. I'm not even exaggerating. I did it myself. Listen, no medical exams, just a few health questions that you must answer honestly. Plus, it's affordable, making it easier to protect your family without breaking the bank. Listen, I want you to lock in your rate today by visiting anthonyoneil.com/life insurance or click the link below to get your personalized free quote today. Listen, as we're getting back to the show, I want you to protect your loved ones. Don't play around with it. Be like me. I promise you. It's a hard conversation to have, but you will sleep peacefully knowing that you took care of your family. Go to anthonyoneil.com/life insurance. Let's get back to the show to help you keep building this wealth.
So what if my home is in a trust on the deed, but my name is not on the deed? Can I still get access to that 50 grand?
You are still responsible for that debt. So as the like the trust is the legal instrument that separates you, but you as a person are still,
because the bill is still coming to Anthony O'Neill's for the mortgage payment, but the deed is in the name of my trust.
Yeah, it's what's on the note versus on the deed is kind of where the mortgage.
But and also inside of the trust, they're going to see who is the executor of the trust, who's really owning the trust. They're going to want to see that paperwork. We just went through a couple of those too. So
for real.
But
okay,
if your property, the name is not, the property's not in your name, and the loan is not in your name, then that's basically a business. At that point, they're not looking at that property as your primary residence. So that is an opportunity to do that. You will incur some costs in the sense of that you might get some higher interest rates if you're refinancing or anything like that into that new loan. But that is a way to get the home out of your name, get into a business, and then, go utilize some of these opportunities, because it's a business at that point. You're not a primary homeowner at that point.
I'm curious. This is not one of the questions that we have down, but I'm curious. What are y'all thought processes on putting a home inside of a trust? Like, when would you all tell a client to put your home inside of a trust?
I think it's a long-term strategy conversation, because we get a lot of folks to come at us and say, "Oh, I need my house to be in an LLC. I'm gonna get an LLC. I'm gonna get more, let's get thrown out."
Hey, that's the TikTok people, dog. It's the TikTok. Oh, I need to be here and run this play right here. I'm like, bro, you don't need to do all that. That's TikTok, bro.
Yeah. So trusts are primarily a long-term strategy and protection from the worst-case scenario of you dying early or something happening out of your control. The trust just gives you more control on exactly what, where, and from a tax shelter standpoint, a trust can be beneficial. But just for everyday ownership, I think it's good to fit as a part of the plan, not necessarily required right away, especially if that's your only property.
Yeah, but if you have family, you have a wife, kids, you have all that stuff, you want to make sure you determine what happens to your properties, your assets. If something happens to you, that's going to be the way to go. But I mean, it was a while before I put my home in a trust, to be honest with you, but that was my first home as well. Yeah.
That's good. So first homeowners, TikTokers out there who say, man, put your home in a trust, get a land trust, do this, do that. Y'all saying, there's some value to it, but there's really no rush to it.
I say consult with an estate attorney and
That's
have
the
that
first
as a
and main
part of
thing.
your entire trust and estate plan.
Yes.
If you don't have any other assets, that's an additional cost, because it's easy to put a house in a trust at any time.
Facts.
Right? So I would not rush to do that first.
Yeah.
I'd be focused on what are the things I'm doing in the house to make sure I'm improving it. Where's my insurance
Yeah.
on the house? What are the things I'm doing to make sure the asset is performing well?
Yeah.
As I'm adding others to my pot, absolutely consider the trust as a piece of it.
Oh yeah, absolutely. All my homes are in trust. I like the privacy of it, and I also like the safety of it.
Yeah.
Yeah, for sure.
For what we're doing. So I love that. And let's talk about DC, because brothers, This market is just interesting. And I keep every time Keith send me something, bro. I like it. Then if I move a little bit too slow, it's gone. But then some of them are still there today.
Yeah.
Like the market is just up and down. For the people who live in the DMV area, let's talk about it. I mean, is it a good market?
It's a dynamic market. Interesting market. And I mean, look, in the same week, I've had a Northern Virginia client that was up against 6 other offers on a $800,000 house that had an after renovation value of 1.1, and another outstanding multifamily property that I've had on the market for over 3 months with nobody coming for it. Like right now, like that's happening at the same time. So I think it depends on where that property people are seeking is positioned from a price standpoint. Is it priced right? Is somebody trying to reach 2021 numbers, or are they realistic with kind of today's numbers? And how many other people want it? If you got a bunch of other people that want something because there's value add, you're gonna pay more. If someone has been off in terms of position or something is just not quite right about that product, either condition, price, access, then you got an opportunity to really win and get, I think what's the biggest one I got recently was on a $950,000 home. We had clients come down, we got the seller to come down almost $60,000 total. And that home had only been on the market for about a month. Right, so it's you can have a story in kind of every example happening in a market like ours because it's just so dynamic. You got really hyper local difference too, which is hard to make a blanket statement.